Good afternoon. Hope everyone had a good lunch. Thank you for coming here today. Thank you, Dileep. You flew in relatively recently on a red eye.
Yep. Thanks for having me on, and great to be here.
Yeah. So I wanted to start with this. You are in the corporate card management space. That is at least where most of your flagship product currently is.
Yep.
It is a really fascinating space at the moment, and I want to get your take on it because we've seen some really big dollars go into this industry. We've seen Brex, they're valued at $12 billion. Ramp is at, what, $8 billion at this point. We have Payhawk here in the EU. You yourself are at $3 billion. And when we're looking into this space and we're thinking about the competition of what's happening, and we are also seeing other players come into the corporate card space that aren't even focused on it.
Yep.
Do you think that corporate cards are a standalone business with themselves, or are we at the point where it is a feature to the broader product?
So I think few thoughts there. So corporate cards tend to be kind of the easiest opener. So I personally think it's going to be very hard to separate yourself just on corporate cards. It's almost a commodity. Like, there's so many different versions of a corporate card. You can offer it, you can do it without fees, you can do it for low fees, and it's almost like you're giving away money. So if the end goal is just a corporate card product, it's going to be very, very hard to make that work because the margins are so tight, especially if you do cashback or any other kind of rewards type program. But the real value is that if you look at kind of business banking as a whole, the vast majority is owned by banks, 90–95%. And I don't really see that changing over time, meaning I think it'll go from 95 to 90. But that 5%, 10% is a massive, massive TAM. And then the second thing that we've seen is that it's not just the corporate cards, it's how do you build a bank type of relationship. So you use the cards for corporate spend, but what about wires? What about working capital loans? What about deposits? How do you build that full suite? And you see this in the US, right? You have Rippling that's now getting into the corporate card space. They're coming from payroll management. You have Brex, that's obviously kind of one of the earlier ones there. You kind of converge in the space, but what we see that's unique is internationally, there's still a pretty large gap, mainly because the infrastructure itself hasn't been built out to the same level. So you have to first go build your own stack, some version of a processor, some version of program management, some version of shipping cards. Like, shipping cards across countries is incredibly hard. All the products ship it in the same country. So we had to go build all that. And then on top of that, you offer the corporate cards as the opener, and then you build a stack around it. So we really measure multi-product usage, which is how many companies on Jeeves use more than one product. And that's really one of our core metrics. So you keep the CAC constant, you increase the LTV, you ideally have a good relationship with the end customer.
So how many users on Jeeves currently are using more than one product?
Today is about 30%.
About 30%,
yeah.
Okay.
And that's a big number that we track. I mean, we've been in operation for 18 months, so it's still kind of going in a direction, but that's the number that you kind of want to build towards. I think one of the big mistakes a lot of companies do, and we could kind of be in that box when we started, is you try to do a lot for everybody, right? SMBs, MBs, medium-sized business enterprises. And so what we're trying to do as we go into 2022, 2023 is just focus on what is that subset and how do we get that 30% number to start kind of moving up.
Yeah, do you think you see yourself, because I'm hearing 10 years into the future, right? We're looking at this corporate card market. Maybe some of these companies will be dead. Would you agree with that?
I think the space is large enough that there'll be some form of consolidation because you cannot compete on capital anymore. Capital is not cheap. It used to be zero. Now it's not zero. And now you need to have a business model that works. If you're taking 2% on interchange and your cost of capital is 5–6%, the math doesn't check out.
Yeah. And especially in this macroeconomic environment. So 10 years later, you're going to be the one who's going to be focusing on companies, medium-sized businesses, tech startups, ones that are specifically going international, right?
Yeah, and the way we look at it is we are building a product today that could not have been built 5 years ago because the infrastructure itself wasn't there. So we're building almost FinTech 2.0, but we're piggybacking off of FinTech 1.0, which is the Plaids, the Flinks, et cetera, the ability to connect into bank accounts, get a view on cash and assets, and use that as an underwriting mechanism to make decisions about what you can provide to the user. So I think you can fundamentally reimagine what corporate card and spend looks like. Like, one of the things we're building is a multi-PAN card. So you can use one card for SaaS spend, and it prints out of our USD bin in the US, and you can use another card in Mexico, and it comes out of our MXN bin because we have local bins in 20 countries, right? So you can start reimagining what that product looks like because your infrastructure itself is fundamentally different than what it was 5 years ago.
Yeah. So you also, I do want to get into a little bit as well. So for you, you're globalizing, you're dealing also with a lot of FX. Like one of your selling points is that you hold a pool of capital, and so you're able to help people very quickly move from peso to USD to the pound if so needed. And so let's start with this. How are you being impacted currently by the very strong dollar? We're seeing kind of currency fluctuations absolutely everywhere. Like I'm feeling it on this trip. People here who are holding USD are feeling this on this trip. What's happening behind the scenes for you?
So a few things, just if you take a step back, so one of the big things that we've done is we've built out our own infrastructure layer. So what that means is if you think about a corporate card, I see it as 4 core components. You have the top of the funnel customer acquisition, you have the processor, you have the program manager for regulation and compliance, and you have the issuing bin in that country from a local bank that gives you a license to issue. So what we try to do is we try to standardize the first 3 directly on Jeeves. So when we go from Brazil to Colombia, Colombia to Mexico, Mexico to Europe, where we are launched and we are kind of expanding, the main thing we're changing is that bin. And we do obviously have regulatory burdens in each country, but the idea is that we don't have to change the stack every single time. So today we're live in 24 countries across these 4 regions because we don't have to rebuild that stack every single time. So the reason that's important is because then we do have full operating entities in about 11 countries. So that means local bank accounts, local Jeeves employees, local subsidiaries that kind of plug into the main US one. And so that's how we kind of hedge against FX, meaning we have local currency in each of these countries. And so a lot of the fluctuation is on the ends, which is when it goes very high or very low. And candidly, like where we see a lot of that is when we have to do kind of financial reporting, because it's fine when you keep it in pesos, it's hard when you come back and you have to like peg it back to the dollar. So that's where we kind of see it, not in like the day-to-day operation, because we do have local assets in local currencies, GBP, pound, et cetera, that we use to fund the operations and the spend there.
Yeah, so you bring up an interesting point, regulation. Regulation is a big, to some extent, innovation limiter for a lot of fintech companies, and you're not only dealing with regulators in one specific geographic location, you're dealing with, as you said yourself, regulators in 24 of them as a startup with currently around 200 employees. That's a lot of legwork, right? And so that's not always what is favored by investors. They prefer, if you have a tighter company, not dealing with a whole lot of regulation. And so when you're looking at that situation, and as a venture-backed company, how are you effectively trying to match both the venture model while also achieving your goal of being able to make it easier for your customers in every single country?
So two thoughts on there. One, I think a lot of companies that are building now, I personally think the hard problems are what becomes your differentiator or your moat, right? The fact that we have to build regulatory compliance and expertise in 3 different continents is an advantage for us, because if someone else wants to do this across the same scope, they have to go back and build that. So that takes a long time to do. I think the second thing is what worked when you were servicing, today we have close to about 5,000 companies. What worked when we were servicing 500 companies does not work at 5,000, right? Mm-hmm. So you have to scale in a way that actually, kind of makes sense. So for us, when we look at regulatory, in the beginning, the goal was just to get going and like test the product market fit to say, okay, is there demand for this? And we saw incredible growth. And since then, we have beefed up regulatory across the board. I think one of the key things you'll notice is we do not take deposits. It's because deposits actually have the highest regulatory burden, because you need to know where your cash comes from. So our model is built on Jeeves credit, meaning we do the underwriting, we provide the capital. The core model is built today not to take deposits. That might change over time, but that's one of the ways we think through like the regulatory component, where because it's our own capital, the burden is not as high as if you were taking users' capital, because that's just a completely different ballgame you're paying if you're taking actual deposits. And so, people see this as like a credit product, but it's by design. Like we built this to be credit on day one, because that's what gives us the leverage to actually expand to so many countries so quickly.
Okay, so you're basically thinking, yes, I'm going to have to interface with regulators no matter what, but I'm going to focus on the regulation that's going to give me a little bit more time, a little bit more
That's right,
leeway.
and we have direct relationships with the regulatory bodies in each of the country. I don't think there's, we can't scale this company if it's not compliant and regulatory. So like there's no, way this company can actually become big without having those things. I think it's more of having a conversation of like, here's why this looks a little bit different, because we provide our own capital. We take capital risk when we give you a card, when we give you capital, when we give you anything else to spend. It's not your money, right? At the end of the day, we got to go collect from you. So there's a separate like underwriting built around that, but the risk is not that we're taking your money and then like something happens after that.
So do you have employees actually in every single one of those 24 geographies?
Yeah.
That you're in? Okay.
24 includes a lot of Europe, so like we have employees in about 12 countries that are Jeeves employees.
Understood. So you are operating on, you're in Miami yourself, not necessarily considered the tech hub, though Keith Raboy might disagree.
But yes.
Yes, of course. And so how are you, like, there's kind of the question of how do you work with a decentralized workforce. I think the fact that this is, I think, one of the most record-breaking, or the record-breaking, like, at capacity web summits that there is. People have demand to be in person.
Yep.
We were talking backstage, being in person is a really big game changer. Like, you have different quality of conversations sometimes. And so how are you thinking about culture and keeping a company together when you're this young?
So, so last year at this time we had about 20 people. We have about 200 right now. So we're still fairly lean for kind of the scale we're kind of operating at. But my first hire actually at the C-level was a chief people officer. So I brought her from Facebook and Netflix, and it was an incredible hire, but like you have to convince them also to jump. But without that, I don't think we could have scaled so quickly. And the reason I'm bringing that up is I'm a second-time founder. You know, one of the things I learned is like finding what your superpower is as a founder. You cannot do everything, and it will change every 6 to 8 months. So like in the beginning, your superpower is probably, you have to figure out product, like you have to figure out PMF. If you don't have that, everything else breaks. And then it starts changing. It's like, okay, now I spend a lot of time on finance, because that's so core to what we're doing. But in the beginning, one of the big decisions I made is I need someone that's my kind of like right hand, that this is their superpower, right? Like building that stack. Culture, I think, is a little bit different, and it's much deeper, which is like culture is really what you do, not what you say, because if you say something and it's your values and you don't do it, it's hypocrisy. So you have to actually do it. And so I think that comes from the top as well. But in terms of actually just scaling, like how do you hire in 12 countries? How do you build, you know, we have 40, 50 people in Mexico, we have 10 in Brazil, we have 20 in London. Like how do you actually build that stack in like 8 months, 9 months? And a big part of that is getting someone for whom that is their superpower, right? And a lot of founders do not prioritize people as one of their early hires. It's always the ones that make sense, CTO, you know, finance, et cetera. All of those are critical, but for us, like the people is the differentiator because it's so core to the fact that we can scale in 20 countries in 18 months. So one of the biggest things I did was right off the bat, like bring in someone that can actually focus on building the org, like building that full stack across, you know, 20 different countries. Culture itself, like just very quickly, I don't think you can like fake culture, right? Like if I say we're customer obsessed and I don't respond to customer emails, which I still do, then no one's gonna believe it, right? So like for me, like it's 3, 4, 5 core values, but it has to propagate down from the leadership, meaning like everybody has to kind of live it or it doesn't make any sense. And culture is not like set in stone. It's a living, breathing organism. It changes just as the company changes. So you really have to nurture it and maintain it or you're gonna lose it.
Right. Well, so how do you do that, right? Like do you do in-person meetings right now? You're flying around a lot.
Yeah, so we have, you know, weekly check-ins. We do offsites. I was actually just in Toronto for a North America offsite, and then I'm going to be in London for UK, Europe one. So we try to do that at least once a quarter. But we also have a GM model. So the GM is the on-the-ground person. So people in Mexico go into the office, you know, 3, 4 times a week. In London, I think it's 3 times a week. So we have a hybrid remote model, but I don't have to be there every single week because I can't, right? So the GM, the general manager, is kind of that representative on the ground, and that is a daily, weekly kind of thing where they do see that person, learn from him or her, and I think that's also very important to how we can scale that.
Yeah. So on this globalization front, I wanted to also talk about the fact that your last round of capital, you got quite a bit of money just before the markets kind of turned into something unspeakable. You raised, it was 100 million, right?
180.
180 million, and your lead investor in the round, and that made you a unicorn several times over, that made you, that was Tencent over in China. And so it was an interesting, lead investor to see for us as journalists because right now we're dealing with a lot of East-West tension. There's a lot of questions about what US regulators are thinking when they're looking at Chinese companies. And so I'm curious for you, when you're looking at the risk-reward analysis of choosing an investor like Tencent and choosing to take capital from them, how did you decide that it was worth that? You know, what was the benefit of having them as your investor?
Yeah, so a few things. One, for us, you know, eventually we do want to expand into Asia. So that made a lot of sense to have someone that has that expertise. 2, I mean, I think if you look at the size of the round, I mean, we're trying to build a global business bank, right? So you need capital. Like this is not a low capital endeavor. And once you start looking at rounds that are 150, 180, there's only so many entities that can write a single check that's north of 50 million, right? Most VC firms cannot write a single check north of like 50, 60 million. So the box that you're picking from tend to be sovereign wealth funds, large entities like Tencent, big like pension funds, etc. And Tencent was actually a small check in our Series B. And so when I like talk to founders, one of the things I try to bring up is how you do cap table construction, right? So it's a little bit of like you get the capital, but you also build it up so your next round is easy. Right, and so Tencent was someone we had like identified as an investor we wanted. They were in the Series B as a small check, and so they had seen our growth, and they were like, okay, we're going to do this before you guys go back into the market.
So in your Series B, before they'd even said, here, we have like $200 million for you, you were like, okay, maybe they can give it to us.
We were growing, I mean, our December, I think November, December, we grew almost 4x in 30 days. And we closed around actually in March. So it wasn't like, we did this last year, it was right after kind of like the Ukraine war and like all of that stuff was happening. So it wasn't like a smooth sailing to get to the end point, but like I'm obviously glad that we did it because the market's obviously turned it even more since then.
Yeah. Are you being impacted at all actually by the Ukraine crisis?
Not as much directly because we don't have exposure in terms of kind of like card usage there. Employee side, we do have some but that's more kind of within the company.
Okay. The other one, as we were walking in, we were having this conversation, and you are Andreessen Horowitz backed, in part, right?
Sorry, what's that?
You're Andreessen Horowitz backed.
That's right, yeah.
Yes. I am curious, we have a lot of crypto conferences happening today. You're in the FX space, and crypto proponents like to say that one of the best possible use cases that they're currently seeing is for cross-border payments, and yes.
Yep.
Do you ever see a model? Are you playing with a model where stablecoins could be part of your future?
So I think internationally, crypto has a lot of potential, specifically for both a hold of value, like you look at what's happening in Venezuela, Argentina, et cetera, and also in like transfer of funds. I think where we spend a lot of time is how do you kind of own the on-ramp and the off-ramp more than how do you do the transfer internally. Because for instance, if you need to send, so one of the things I think we were mentioning is we're launching this product, Jeeves Pay, right? So with Jeeves Pay, you can use your existing credit line and send wires. So think about like TransferWise with credit or Revolut with credit. It's all built into the app. So you get 100K, you can use that to send money. The reason we were looking at something like crypto is we would have the same ability to send funds from the US to Canada, US to UK, but instead of using fiat rails, we would use crypto rails. So I think a lot of people focus on the actual transfer of funding, but one of the things that's kind of missing is how do you make the on-ramps and off-ramps easier so you're not having to download like 5 different wallets to kind of get to the point to actually send the funds. So I'm a big believer long-term in crypto. I think it's more like narrowing down the use case so there's a direct impact, but like transferring funds is an easy one that for us long-term makes a lot of sense.
Do you have like specific folks in your team right now, or is this something that you guys just think about?
This is part of kind of our CTO, and one of the reasons he agreed to join Jeeves is the fact that crypto was in our long-term plan. So again, good people like working on hard problems, and I think crypto is a hard problem. I think what we're doing is a hard problem, but good people, smart people like working on hard things, and so that's how I was able to convince him to kind of join us.
Yeah, great. Well, we are unfortunately out of time, but appreciate having this conversation. Thank you everyone for joining here with us today.
Sounds good. Thank you for having me.